What's going on? Welcome back to the channel. So today we're going to talk to you about Opendoor. I want to go over some of the data points, break it down on what really moved it and what today really did signal about Wall Street and how it views Opendoor. Before we get into any of that, make sure you guys hit that thumbs up, and with that, let's get right to it. So Opendoor went down 0.86%, 587 the high, 565 the low. So a little bit of volatility leading into Powell. And we had today roughly around 44 million shares being traded. So oddly enough, a little bit higher for the volume than the norm. When it came down to today, we did have some data points first thing. Didn't really move the market all that much. Some mortgage applications as well as mortgage market index. Both came in a little bit lower than the previous. So this normally would really affect Opendoor, but it didn't really move Opendoor, nor did it really move the broader market all that much. Today, the big thing was going to be Powell. So we didn't get the cut that I guess people were kind of wanting, but what Powell said afterwards kind of popped the optimism. So ultimately, kind of signaled that a lot of the inflationary data has been coming in better than anticipated, and a lot of the labor data has been either stagnant, if not improving. So there wasn't really anything on his radar to justify a rate cut. So this is why we did see the likelihood of a cut for the upcoming March 18th meeting go down to 13.5%. So this is something I've brought up in previous videos, how just based on the price action, Opendoor is being treated as like a true credible company. And today was 1,000,000% proof of that, because we've seen in the past Opendoor go through these types of transitions where the market kind of realizes that we might not get a cut. Then people sell Opendoor, right? Because there's a very big correlation between lower interest rates and Opendoor's business thriving a little bit more. There's a lot of other things happening at the same time, but of course this is a pretty big catalyst. So taking this out of the mix and Opendoor only going down 0.86%, that is definitely proof that Wall Street sees Opendoor as a innovative company. And most likely there's a lot of big things happening behind the scenes. So let me know your general thoughts on that. Like I said, I know I've brought that up time and time again on occasion, but today was 100% proof of that. Aside from that, we haven't really seen that much in updates from Kaz. Of course, I think he's just going through that quiet period up until their earnings. But he kind of did respond to various things like unusual whales, where they just said Gen Z is defiantly giving up on ever owning a home per fortune. And Kaz just says that we're here to fix that. So nothing really public information or whatever else. There was a 8K that did come out though recently, and that was right here on Monday, January the 26th. Kind of just signaled as a FYI that Kaz, even through X, technically is considered information. And this is something I've mentioned in the past, that when this first came out on September the 17th, Kaz was still very much talking, like probably was making his lawyers cringe, but he has definitely improved tenfold based on all that. But nonetheless, that there wasn't really that much in speculative things coming out. So aside from all of that, quickly popping over here. So today's shorts did increase 324,000 shares, 15.35% of the free float is being shorted, works out to be 120 million shares overall are being shorted. DTC still sitting at 1.4 days, so still does signal that shorts are overextended. Plus, with shares on loan being at 74 mil, there's a lot of signs of naked shorting. And this has been the case, as I've mentioned, since kind of end of November. So that's where things started to really go haywire based on the short side of that. Cost to borrow has dropped since my last video, so it dropped a couple percentage points. Nothing really crazy though, because this is an annual rate. So whether it's 5% or 0.39%, it's not that big of a deal in all honesty. So shorts definitely could have doubled down, but they didn't. And so again, that in my opinion, is another bullish point. Looking at the options, 2.8 million in calls, 889,000 in puts, 45% of all the options being done are and were bearish in nature. From a bull standpoint, you see a consensus for it to be roughly 6 to 650. Bears are anticipating for it to be sub 550. So we have some data that's coming out tomorrow. So we have initial jobless claims. We also have some manufacturing data. On Friday, we have PPI, and Friday is going to be the big day because that's going to be the last trading day before potentially another government shutdown. So that will be a pretty volatile day if we haven't seen that be rectified yet prior to that. So the bears are anticipating clearly a lot of that data to go south in reality. These are all the transactions that did occur on the secondary market above $100,000. So you did see some buying here and there, a couple sells, so 3.9, 1.6. Dark pool was very active today, so it kind of is more in line with what shorts did. So shorts primarily like to use the dark pool. On a side note, with it closing at 576 though, it landed right above this S2. So tomorrow, just watch for 574 and 542 to be support points. Flip side, 593 and then 625 is going to be the next strong target / resistance. So today after hours, we also had Microsoft, Meta, and also Tesla. Those were kind of the big three unveiling the earnings. And luckily enough, Meta hit a home run. So potentially that might cause a lot of growth stocks to really move higher. Microsoft, I did believe, I didn't really dive deep into their earnings all that much just yet, but it looks like they did miss on some aspect of their earnings. But nonetheless, I think Meta will be able to really push a lot of tech and AI stocks tomorrow. So that'll be a pretty good day. Aside from all of that fun stuff, getting right to the actual chart. As I've been very open with you guys about, this doesn't look good at all. So it usually does signal that there's going to be further consolidation, how this is laid out. But we have a lot of big things coming out the rest of the week that could really change the dynamic of this. One thing to take note of though, which might be that kind of bottom, is this 200-day moving average sitting at 444. So worst case scenario, if things don't kind of conclude and like get better, just watch for that 200-day moving average. Stochastic RSI is extremely oversold. So if Opendoor, for whatever reason, puts out some good news, then you could see a nice push higher. Most likely not this week. I was anticipating either end of this week or if not early next week, Opendoor announcing the date of their earnings. That most likely will be next week. And I've kind of noticed what CAS does and what Opendoor does. They try to target good times for PR. I've kind of caught on to that a little bit. Sometimes it can't be helped, but you can kind of see that they are trying to strategically place posts as well as PRs. So logically, this week is kind of crappy, so it might be kind of forwarded to next week. So at the end of the day, I think Opendoor is eventually going to do a lot of good things, and their upcoming earnings, which again hasn't been announced, is going to be a very big catalyst for them to really let Wall Street know how innovative they truly are. So let me know your thoughts on Opendoor. Give yourself a shout out if you bought, sold, held, or whatever else. One final thing, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto. Put out daily day trades, numerous swing trades, worthwhile to pop over there and check that out. With all that, appreciate all of you watching.